Welcome to Tax Central. In this video we will learn about advance tax and its calculation method. Advance tax means income tax should be paid in advance instead of lump sum payment at year end. It is also known as pay-as-you-earn tax. These payments have to be made in installments as per due dates provided by the Income Tax Department. A person is liable to pay advance tax if his tax liability is $10,000 or more. If a person fails to pay advance tax or delay the payment of tax, then he is liable to pay penalty and interest as defined in income tax law. So, not only we have to pay advance tax on time, we also have to estimate our tax liability for advance tax close to our actual tax liability to avoid interest payment. Let's see how can we estimate our tax liability for advance tax payment. Since we cannot predict our turnover, profit and tax liability accurately, we have to estimate our tax liability for advance tax payment. So, there are two methods you can use to calculate estimated advance tax. This is the Excel sheet we have prepared to calculate the advance tax and actual tax. And interest calculation if advance tax paid is less or not paid on time. Under first method to estimate our tax liability is we will take current year figure. First installment of advance tax we have to pay on or before June 15th. Until June 15th we only have profitability of 2 months April and May. So we will divide 2 months profit by 2 and multiply it 12 and we will have estimated annual profit based on current data and let's say tax rate is 30%. We will calculate 30% of estimated annual profit. Now we have to pay 15% of this estimated tax as advance tax. Similarly, when we have to pay second installment of advance tax on September 15th up until now we will have 5 months profits, so we divide it by 5 and multiply it by 12 and again we will have estimated annual profit, then we calculate 30% tax on this and now we have to 45% of this tax amount minus tax we have already paid in first installment as advance tax. We will repeat this process for third and fourth installment of advance tax calculation. Here we have all advance taxes paid figures. Now after year ended our actual profitability is this. After applying slab rate taxes our actual taxability comes to this. Here you can see advance tax calculated on actual tax liability. If we minus advance tax calculation on actual tax from advance tax paid we will have shortfall amount. If this advance tax paid less than this defined percent then we have to pay interest under section 234C and 234B. To calculate interest, if first installment of advance tax paid is less than 12% then we have to pay 1% of shortfall amount multiply by 3 as interest under section 234C. You can pause the video to see the formula. To calculate paid percentage, just divide advance tax paid from total actual assessed tax. And if total advance paid is less than 90% of actual tax, then we will also be liable to pay interest under section 234B, which is 1% of shortfall amount from April onwards multiply by months till shortfall amount is paid. To calculate total tax paid percent, just divide total advance tax paid from actual assessed tax. From total tax payable we will minus total advance tax paid. And add interest as calculated below. Here we can see our net tax liability which we have to pay while filing our return. Under second method we have taken previous year data to estimate current year liability. So during previous year, our turnover was this and profit was around 8% and tax on profit was around 30%. So suppose this year we will achieve 10% growth in turnover. And our profit would be 9% of turnover and tax 30% of profit. Now we will calculate advance tax on this estimated tax value. So before June 15th we have to pay our first installment which is 15% of our estimated tax liability. Next, we have to pay second installment of advance tax, which is 45% of our estimated tax liability minus the tax we have already paid in first installment. Then, third installment is 75% of tax minus tax paid in first and second installment. And finally, fourth installment is 100% of tax liability minus first, second, and third installment tax paid. After year ended, we got to know our actual results of our company. So as per actual result, our turnover comes out to this and profit margin was 10%. We have pre-applied formula for calculating tax on income. You can take help of online tax calculator to know the actual tax liability. This is our actual net tax liability. According to this tax liability, our advance tax would have been this value. You can see that there are difference in advance tax we have paid on estimated tax value and advance tax as per actual tax liability. If difference is not big, then there is not much to worry about. But if advance tax paid is less than minimum percentage as defined, then we have to pay interest under Section 234C and 234B as explained before. In net tax payable section, you can see the amount of actual tax minus total advance tax paid, then adding interest, we will have net tax payable, which we have to pay while filing our income tax return. That is how you can calculate advance tax, net tax payable, and interest if applicable. Thanks for watching. Like if you find our video useful and subscribe for more.